So let me tell a story. It all started at the height of the British Empire and the assassination of Franz Ferdinand, the start of World War I. Germany was the rising power in Europe. Thanks to technological advances, the world saw its biggest war to date. 20 million people died. Then came the Treaty of Versailles. Germany had to pay roughly 132 billion gold marks in reparations, roughly 3.5 times their GDP at the time. The Germans used a nifty government trick, currency debasement, to help them pay their debt. Germany was poor and struggling as a result. 80 countries, starting with the UK and including the USA, got off the gold standard. Out of these conditions, Hitler came to rise, and Nazi Germany started World War II. Technology advanced, then came the atom bomb, etc., etc. 70 million people died in the war. Hey guys, I'm Drew. I turn the most important articles on Bitcoin into documentaries. This video is based on the thread by James Rothmann and the podcast by Robert Breedlove and Raoul. When the war ended, people, especially those in the US, in euphoria, started having lots of sex, lots of babies, which led to the baby boomers. Post-war fiscal stimulus and the consumerization of war tech led to the golden era of the 1950s. The global population saw growth of 30 to 40%. The world economy globalized. Then Bretton Woods happened, which pegged the currencies to the US dollar. Countries increased reliance on each other that prevented World War III, or Pax Americana. The US is unofficially appointed as the superpower to protect the free world. Then, in the 1960s, the first baby boomers, the biggest generation ever until then, entered the workforce for the first time. Demand exploded. Prices exploded. The biggest demand shock the world has ever seen. 75 million boomers became economically active. As a result, the US struggled to keep up with deficits, losing lots of gold, supplies, and even completely depegged from the gold standard. The world is now on a fiat currency system. We then get the great inflation of the 1970s. This is not necessarily a monetary phenomenon, but a demographic one. More and more baby boomers demanded more and more goods and services. A demand shock. Here comes the big problem. Since the 1970s, real wage growth is flat for the next 50-ish years. Too many people were competing in the workforce. Supply outstrips the demand. No need to raise wages. Money decouples from productivity growth. The problem is that as fiat money gradually debases, asset prices start to rise, but wages don't. That is why we sit with an angry far right and far left. They have been left behind economically. Politics are downstream of economics. Then it gets really ugly. So Margaret Thatcher, in an attempt to convert Labour Party supporters to conservative votes, gave low-income earners the chance to buy their previously free housing at a low price. As a result, a new generation of low-earning debt slaves was born. Ronald Reagan used the same playbook in the US, making credit abundant. The rise of Wall Street in the 1980s. Stock and property prices rise, but people can't buy proportionally because their wages don't go up. In an attempt to catch up, people start borrowing money, buying assets, and hoping they go up. The snowball starts. The more people borrow to invest, putting their pensions into stocks, the more prices rise. All in search of the American dream. People often confuse being rich with being in debt. But that's the way of the fiat system. It incentivizes debt to buy assets in the hope of getting ahead. Then, the crash of 1987 happens. Alan Greenspan cuts interest rates outside a recession, a new trick in the central banker's playbook, showing first signs that the Fed will bail out Wall Street. Then we move on to the fall of the Berlin Wall and communism. China also starts opening up. The World Trade Organization sees the light. Workers in developed countries now all of a sudden compete with workers in developing countries. Although consumer prices dropped, wages stayed the same, ruining the American and developed world workers' class. We then see a big boom in the Asian markets, backed by dollar leverage, without dollar earnings. It all came crashing down not long before the crash of long-term capital management. Greenspan cuts rates again, bailing out Wall Street for a second time. This was probably the last time in history that we could see the free market do its thing without the whole financial system crashing down. So, with the Fed having everyone's back, it was a free-for-all. Everyone levered up and went all in the US stock market because no one wants to touch emerging markets. We see one of the biggest stock market booms, followed by the dot-com bust, and then the property boom. The boomers start retiring, the labor force participation rate goes down, and so does the velocity of money. We all know what happens next. Global financial crisis. To no surprise, the Fed steps in again and cuts interest rates again. But this time, it's not enough. What do you do then? Print more money? No, that sounds wrong. We all know that if you print money, the value goes down. So, we start quantitative easing instead. Printer goes brr. We didn't have any other choice. In a debt crisis, we can't allow the collateral to go to zero. Otherwise, the whole system goes down with it, like Argentina. Everyone is an Austrian until it happens to them. As the Fed continues its quantitative easing, CPI doesn't rise. It looks like it is actually working. But, and a big but, we get to where we are now, the everything bubble. But everything can't be in a bubble. Bubbles are measured by looking at the price of one asset class relative to another asset class. So you can't have an everything bubble. Asset prices rise, but not because the value is going up relative to other assets, but because the value of the denominator is going down. This is what we call debasement. Since 2008, the only assets beating the debasement are Bitcoin and the Nasdaq. What we are witnessing now is the transition from one generation to another. 75 million boomers retiring. 85 million millennials are at what are supposed to be their economic peak, but they don't have much to show for it. Free capital is funding innovation. Innovation that will probably put the 85 million millennials out of work in the not too distant future. And the central banks can't stop printing because then it all comes crashing down. The Fed can't unfuck us. So what can we do as millennials? Can we unfuck ourselves? Yes, we can. How? Bitcoin. It is a call option on the future and protection against currency debasement. But we still have a few rough years ahead of us. The right is saying cut taxes. The left wants to supertax the rich. Fiscal stimulus will lead to more debasement. We can't go Austrian and let it all burn. Too late for that. The exponential age is about to happen. All jobs are at risk. And how will people get money? We don't know yet. But to some extent, lucky for us, the price of everything digital, including energy, is going to zero in the long run. Energy is everything. Everything is energy. Will the future be dystopian or utopian? Humans have a way of ending up somewhere in the middle. In summary, war led to sex. Sex led to babies. Babies led to demand. Demand led to debasement. Debasement led to Bitcoin. The gradual migration to a decentralized financial system is what will save us. Let's unfuck the system. Hey guys, Drew again. If you like this video, subscribing really helps out. Special thanks to James Rothmann for writing such a great thread. Go check out the conversation that this video is based on by Robert Breedlove and Raoul in the description.